Good morning, everyone. Just wanted to take a quick moment to address the news that many of you heard over the weekend about some regional banks, and specifically Silicon Valley Bank and its recent failure. Many of you have had questions about whether or not this is going to impact your bank balances, whether or not this is something that we can expect to happen again and again with local and regional banks, and what, if anything, you need to do. So first, let me describe briefly what happened. Please know this: Silicon Valley Bank was the bank for many large tech companies, especially out in California. That differentiates it from most banks in that it did not have a lot of retail customers, meaning people like you and me. Why does that matter? Because what happened at Silicon Valley Bank happened because of the size, specifically, of regular inflows compared to the size of regular outflows. As you know, 2022 and the beginning of 2023 have been difficult for many tech companies. And when tech companies go through difficult periods, what it means is that they end up spending more money than they are bringing in on a revenue basis, which results in cash outflows from a bank. Just like if you were spending more money than you were earning, your bank balances would decline, but just in a larger scope, which means that without any reason or distress, Silicon Valley Bank was in a period of cash outflows. And when they went to raise capital to meet those cash outflows, they did so in a way that alarmed the market, in my opinion, unnecessarily. But when the market becomes alarmed, and we saw this on Thursday and Friday, it can, in rare instances, trigger a traditional bank run, right? Where once depositors become concerned that their access to their deposits is going to go away, they immediately go to the bank and demand their deposits. This all happened not only in real time, but at a super fast pace because of the internet, the ability to do online banking, and the speed at which Twitter can send out messages. So as you're noticing that this happened in a large part because of the tech industry, right? Not that it's bad, but because news spreads super fast. Over the weekend, the FDIC stepped in and said, we are insuring not only the deposit maximum, the $250,000 number that we're all familiar with, but we're actually going to provide full access to all company deposits, all bank account balances on Monday morning. This is great news, and they did it for a couple of reasons. The first is to ensure that regular people like you and me continue to have a high level of confidence in our bank and the availability of our deposits. And more importantly, they created a mechanism which allows banks to essentially offer very rapidly liquidity to any consumers, any customers who require liquidity. So, in summary, this is all good news. I'm filming this, it's 9:57, right after the markets open, and I would say that markets are reacting the way we would expect to the Federal Reserve stepping in and giving the good news. They are down, but not down as dramatically as we would expect. And actually just refreshed, and now they're up. So that's normal. This is why we have the FDIC. On the drive into work this morning, I was imagining what it must be like to work at the FDIC, where for years, really since 2012, 2013, they've had very little to do. And then in a period of 4 or 5 days, they have had to do all of the work that they are required to do by the US government. So what do you need to know? What should your takeaways be? First, and you hear me say this frequently, be aware of the FDIC insurance limits, right? What ended up happening is that they stepped in and essentially insured the portion above the FDIC insurance limits. But it's always smart just to remove that degree of anxiety from your life, to make sure that you aren't leaving large deposits at banks above the FDIC insurance limit. Or if you are, that you would have access to capital elsewhere for a period of, a couple days to a week or so, if you were to lose access. So be aware that the FDIC generally insures up to $250,000 per person per bank, right? And think about a person being like a tax ID number. So in most cases, if you have a bank account at a bank, in your social security number, you are insured up to $250,000 at that bank. If you have a joint account under two social security numbers, you each get the $250,000, so that's $500,000. So be aware of that, talk to your banks about it, and make sure that you're making smart decisions as it relates to FDIC insurance limits. Those of you who have worked with me for a while have certainly heard me refer to those limits either about your bank account balances or about some investments that we do here, like CDs that are FDIC insured. Number two is keep in mind that while this run on the bank scenario is terrifying, it might pull you back to 2008 more recently, or if you're a history buff like me, it might even remind you of the Great Depression. Keep in mind that this is the reason that we have the FDIC. This is the reason that we have people working at the government to make sure that when there are these scary situations, runs on banks going under, that consumers are protected, right? Remember that. And number three, as it relates to the investment markets, remember that stock investments pay higher returns over time, specifically because they are risky, right? They do go up and down and fluctuate quite a bit. This is very normal. This is very natural. None of you, I'm happy to say, none of my clients have any significant exposure to SVB and very limited exposure to regional banks, primarily because we are using index-based investments, and while these banks are now front page news, they don't make up a large portion of our overall economy. So from a stock exposure standpoint, I don't have a ton of worry there for any of my clients. Last but not least, some of you have already reached out. Kudos to you. If you have concerns, if there is something that you would say, hey, I'm worried. I know Melissa's busy, but this is giving me a little bit of anxiety. Call me, email me. That is what I'm here for. I have time for you. And I look forward to hearing from you soon. Thank you so much. Bye.